Well, holy smokers, this ain't no jokers. Oh my goodness, guys. Today I'm going to share with you a bunch of Jack Jackson stocks out there. I don't think people even realize how many stocks are really in this space. I want to share some perspective with some of you out there because I know a lot of folks don't even own one Jack Jackson stock in their portfolio. And I want to kind of share some perspective with you here at the start on why you should at least consider owning one or two Jack Jackson stocks in your portfolio. And I just got into the space about a year ago, okay? And I think it's very widely known out there that I was a Planet investor, okay? Now, my number one worst stock of all the stocks is the Planet, down 76 whopping % on the Planet, 54K down on this one, right?
Is now the time to buy British American tobacco for fat dividend yield, or True Leaf cannabis, or Planet 13 stock?
Now, in regards to Planet, I do believe this one will come back. I believe it's going to actually start coming back in the second half of this year. I believe they're going to start reporting much more impressive numbers over the next several quarters, and I believe things will get better for the company in 2024 and beyond. I believe the market, in regards to this industry, is in a bottoming out phase right now, and I believe it will gradually get just a little better over the next several years. I believe that will be a boom for Planet. If there can ever be any sort of realistic possibility of federal legalization, it's a game changer. That's the V-shaped recovery, if we could ever get that. I don't know if that's going to happen.
Ms. Rivers, welcome to Mad Money. Thank you so much for coming on.
Hey,
Thank you. Have a seat. Yeah. Thank you. Okay, so first I want people to understand, why do your customers come in? What are they getting, and how's it helping?
And we're seeing dramatic results with our patients every single day. Okay,
so doctors might send patients to your stores, and they are stores, for what? For back pain? Give us some of the uses, because I want people to understand that medical uses are big.
Absolutely. So in Florida, there are 10 identifiable conditions. PTSD is a very large category for us, especially in Florida, because we have such a large veteran population. Okay. In addition, you have, of course, AIDS, cancer, seizure conditions, and so forth. And then also in Florida, there's like, kind, or class, which allows physicians to analogize those conditions to any other condition. So, for example, if you have a severe anxiety disorder, you also are able to be a patient in Florida.
British American Tobacco is the largest tobacco company in the world based on revenue. It has an insane 8.5% dividend yield. That's attractive to a lot of cash flow investors because they think that they can get 8% a year as return. In this video, I will dive a bit deeper into this big tobacco stock. Talk about, is it finally a buy? And is cannabis stock like True Leaf or Planet 13 a good buy at current value? Pretty much the lowest price it has ever been. I have been reading The Snowball. I will talk about the basics of it. How to build a solid dividend portfolio. Is now the time to buy British American tobacco? I will explain it all right after this.
How you like that?
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you're a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore, you want it to be real, you want it to be true, you want to join the Audacious Money Witch Club, don't you? When we look at the last year's performance of British American Tobacco, the stock is down 19%. Over the past 5 years, the stock is down 35%. Since IPO, the stock has went up over 5,000%. People are looking at this. They are saying this is enticing. Look at how much bargain price I am getting compared to its all-time high. Look at that fat dividend yield. Look at their gross margin. It's really amazing. If you look at it on the surface, it is very interesting. It's trading for less than book value, meaning the shareholders' equity of the company. Its free cash flow yield is whopping 17%, the highest I have ever seen. So is BTI a trap? Well, let's ask Buffett. In fact, I am reading this book. It's an in-depth study on Buffett's life called The Snowball. Apparently, you want to buy companies paying a growing dividend far above the rate of inflation. The compounding effect is almost magical. It extensively goes through his entire investing history. One of the things that points out is that he's basically a dividend growth investor. Throughout his entire life, especially his early life, he was always accumulating stakes in companies that paid him excess cash flow. Buffett used that excess cash flow to buy more companies that paid growing amounts of excess cash flow. That is literally the snowball effect. It's Buffett's investing strategy. The reason that Berkshire doesn't pay a dividend is because Buffett is playing the role of the investor, reinvesting the cash flows, but otherwise he is running the company the exact same way as a dividend growth investor, buying good companies that pay excess cash, reinvesting that cash to buy more companies and focusing on companies that can really grow that cash pile over time. The magical effect of this is a strong compounding snowball effect. The first mistake dividend investors make is focus on starting yield. The starting yield is what the company's yield is today. That is the main focus of a lot of dividend investors. They seek companies that will instantly give them a high starting yield, and a lot of companies that have a high starting yield are not the best companies. We can look at the Foot Locker as an example. This is a company that lures investors in with a very high starting dividend yield, a yield of 8.6%. So you may look at this and think, wow, I buy $100 of Foot Locker stock and I get $8.6 back every single year. That's pretty good. That's a much higher yield than a company like Nike. So Foot Locker is a better bet. I am getting more cash flow by owning Jeremy's Eazzy money stock, no less. The temptation to buy into companies with these very hefty starting yields without looking at the fundamental drivers of the company leads to a lot of underperformance. Foot Locker has been a horrible company to own, going down 69% over the past 2 years. For the past 30 years, even with dividends, this company is basically given no returns. So that 8.6% juicy starting yield you are getting has given you absolutely no returns over the past 30 years, as the S&P 500 market has gone up over 800% over the past 30 years. Most importantly, during hard times like recently, Foot Locker has decided to pause dividend. So if you're retired and counting on living with the dividend money, now you're out of your cash flow when you needed it the most. They have a breathtaking amount of debt compared to their cash position. Is Foot Locker a value trap? Well, based on its low PE ratio and the recent quarter stock crashes, it looks like one. So the number one mistake is critical to avoid for every dividend investor. The higher the starting yield, the more likely it is that the company is turning itself into a value trap. What about British American Tobacco? Is it a value trap? Is it profitable? Yes, BTI stock is extremely profitable. Profit margin is at 24%. They are paying a dividend. They are a profitable business. Why is the stock not performing? Why PE is at 6.9? Oh, look at their balance sheet. It's scary. They have $5 billion in cash and $50 billion in debt. They have more debt on their balance sheet than Disney. Their main source of revenue is dropping. Cigarette sales are decreasing compared to last year. The key risk of this stock is the FDA is considering banning menthol cigarettes. The US government has gone after the tobacco industry before. So if they decided to ban menthol tobacco, BTI stock will be hurt by it because the vast majority of BTI's revenue comes from US cigarette sales, and 55% of their US cigarette sales are menthol tobacco. If FDA really decided to ban menthol, BTI might have a massive drop in revenue. That's a huge risk for this stock. Another huge risk is the majority of their shareholders' equity is filled with goodwill. How do they have goodwill? By acquisition? They bought Reynolds. They sell Newports and Camels, which are menthol cigarettes. They spend a fortune acquiring this company. Bought every last dime of Reynolds' outstanding long-term debt. Basically, 80% of this company's asset is sitting in goodwill. Goodwill is an intangible asset that you can't touch. It's the overpayment of the fair value of the asset paid by the company. If FDA banned menthol, then that goodwill will be impaired and written down. That decrease of the goodwill is going to hit the income statement, affecting the net income line of the number. And their EPS number will look very ugly for a few years. So British American Tobacco, although the money printer is running smoothly, it just seems tired because they have a mountain of debt and government is not on their side. Speaking of industry, government is not on their side, let's get into TruLeaf stock. Why it's unprofitable. Could it be the government classified cannabis as a Schedule 1 drug, and when you do tax return, you can only deduct cost of goods sold, which results in you having a very high tax liability? TCNNF stock. Gross margin is trending down ever since they acquired Harvest and all their long-term debt. Kim River also absorbed Harvest's CEO as TruLeaf president. It's a highly competitive industry with unfavorable tax liability. Until the laws change, all cannabis company will have an insanely hard time becoming profitable. They have positive operating margin, but negative profit margin. This is very bigger scale than Planet 13. Planet 13 has this massive building in Vegas with massive overhead expenses that makes them struggle to be even profitable operationally. From Planet 13 income statement, we can clearly see the Planet stock. Jeremy's worst stock in 2023 has negative operation income. According to TruLeaf 10K, cannabis business can't deducting their ordinary and necessary business expenses. For example, general administrative costs and operating costs, forcing them to pay higher tax rates than similar companies in other industry. They don't even have access to bank accounts. They are forced to operate in cash only. If you own cannabis stocks, just hold it and pray for them to legalize it soon. FYI, without legalization, cannabis stocks are way worse than any dividend growing stock, obviously. They can't win. It's a waiting game for the legalization if you want to speculate. However, if they legalize cannabis, TruLeaf will fly to the moon in days. Yes, you heard me right. Expect 30% plus in gains a day. Because TrueLeaf is one of the largest MSO in the US. It has scale and it's relevant. You are such a good boy for watching my video right till the end. Bye.